We're jumping straight into Nebius Group today. Everyone is watching the price action, but the real story is that massive $20 billion backlog of pre-sold contracts.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds of whether this is the next tech giant or just a flash in the pan, do us a huge favor.
Yeah, please do.
Hit that subscribe button and smash the like button. It really helps us keep simplifying the market for you. And honestly, we just appreciate having you along for the ride.
We really do.
Okay, so let's unpack this properly. We're looking at a stock that has been, absolutely all over the map.
Oh, completely.
If you pull up the chart for the last, 12 months, Nebius has traded as low as $18 and as high as $140.
That is a wild ride by any standard.
It's the kind of chart that gives day traders, heart palpitations.
It is extreme volatility. And right now, sitting here on January 29th, 2026, we're hovering right around $99. It looks like the stock is taking a breather, maybe consolidating a bit after that parabolic run we saw.
But the core tension here isn't just about the chart, is it?
No, not at all. It's a fundamental question. Is this a bubble that's about to pop because the hype train has run out of steam? Or is the market massively underestimating a company that has already sold its infrastructure to the absolute biggest players in the game?
That is the $20 billion question, quite literally. So let's start with the bull case. Why are people so excited?
Right.
Why did this thing run up to $140 in the first place? The argument seems to be that Nebius isn't just another cloud provider.
No.
They're claiming to be the epicenter of AI infrastructure. But doesn't every cloud company claim that? What makes them different from, say, Amazon AWS or Google Cloud?
They all do, but the distinction here is vertical integration. Most cloud providers are generalists.
Okay.
They host your email, your database, your website. Nebius is built solely for the heavy lifting of AI. They aren't trying to be everything to everyone.
Nice.
And the proof isn't in the marketing, it's in that backlog. They have secured over $20 billion in contracts.
$20 billion. Let's just pause on that number. For a company of this size valued at, around $25 billion, having a backlog almost equal to your market cap is, it's unusual.
Yeah, it's incredible. It's more than a safety net. It's a roadmap.
A roadmap? How so?
In the traditional SaaS world, companies usually live and die by their sales quota every single quarter. They start at zero.
Right, they have to go hunt for revenue.
Exactly. Their sales teams are constantly cold calling. Nebius is in a totally different position. They have the orders signed.
So the revenue is already mapped out.
For years into the future, it provides a level of visibility that you almost never see in the tech sector.
So they aren't chasing clients, the clients are already locked in. And we are talking about the hyperscalers here.
Right. Meta, Microsoft, these are the titans. The fact that they are signing deals with Nebius tells you something important. These giants are usually obsessed with building their own stuff. They want to own the stack completely. But demand for compute is so high.
So high they can't build it fast enough themselves.
Exactly. The supply of high-end GPU clusters is so constrained that even Microsoft needs to outsource capacity.
It's like a restaurant that's so popular they have to rent the kitchen next door just to keep up with orders.
That's a great way to put it.
Yeah.
And Nebius is that high-end kitchen next door. It's not potential sales. It's not some total addressable market slide in a pitch deck.
No, it's real.
It is signed contracts. They have the orders. Now the challenge, and we will get to this, is just delivering the compute power.
Okay, so they have the customers, but what about the tech? Because everyone is trying to build data centers right now. What makes Nebius so special?
Well, this is where it gets really interesting for Nebius, the NVIDIA advantage. This is their moat.
Their moat.
Nebius isn't just buying chips off the shelf like everyone else. They have a strategic partnership. It gives them exclusive early access to the Rubin platform and the Vera Rubin NVL72 systems.
Okay, hold on. Rubin platform and NVL72. I feel like we need a translator here. For those listening who aren't deep into chip architecture, what does that mean? This is the bleeding edge, right?
This is the absolute bleeding edge.
Yeah.
To understand why this matters, you have to look at the timeline. We had Hopper, which powered early ChatGPT, then Blackwell, a huge leap. Rubin is what comes after Blackwell.
So while other companies are still fighting to get their hands on the current generation,
Nebius is already queuing up the next one.
wow.
And the NVL72 system is a rack scale design. So instead of individual chips communicating over cables, the entire rack acts as one massive super powerful GPU.
Which means it's faster.
Way faster.
Yeah.
And if you are training a massive model, speed is money.
And that creates a trap, doesn't it? A good trap if you're an investor.
It's a very sticky trap. We call it switching costs.
Yeah.
Once a customer builds their models on Nebius's Blackwell clusters or moves to Rubin, it is incredibly difficult to leave.
Why is that?
You can't just copy-paste that infrastructure to a competitor who doesn't have the same hardware roadmap.
Yeah.
The software, the networking,
Right.
it's all tuned to that specific hardware.
So they lock you in with the best toys. I like it, kind of like the Apple ecosystem.
That's a good comparison.
But there's also a geographic angle here that I found interesting. They aren't just fighting for space in Northern Virginia.
Correct. And this is strategic genius. They have a first-mover advantage in Europe and the Middle East.
While everyone else is fighting over power grids here in the U.S.
Right. Nebius is establishing what we call a sovereign AI cloud footprint in markets that are desperate for local infrastructure.
Sovereign AI. That sounds like a buzzword. What does it actually mean for the bottom line?
It means compliance and security. European data privacy laws, like GDPR, are incredibly strict.
So data has to stay in the region.
Exactly. Large European corporations often cannot legally ship their sensitive user data to a server farm in Arizona. By building locally in Europe, Nebius becomes the default option.
That's a massive moat in itself. It's regulatory protection.
You literally can't use the competitor even if you wanted to.
Now let's pivot to the product itself. It's not just renting chips, right? I was reading about this Nebius token factory and AI Cloud 3.1.
Right.
Sounds fancy, but does it actually make money?
It makes money, and potentially better money than raw hosting. See, most of the AI boom so far has been about training models.
Teaching the AI.
Yeah, feeding it data for months. But the token factory suggests they are moving into inference.
Break down inference for us.
Inference is when the AI is actually running live. When you ask ChatGPT a question and it answers, that's inference. It generates tokens, basically pieces of words.
Ah, I see. So training is like building the car in the factory, and inference is like driving it on the road.
Great analogy.
Yeah.
And here's why investors care. Training is sporadic. You train a model, you stop. But inference,
It's constant.
it's 204/7. It's recurring volume.
Mhm.
By launching the token factory, Nebius is expanding from just being the construction site to being the highway itself.
That is a huge pivot if they can pull it off. And it seems like the smart money believes they can. I saw Fred Alger Management added Nebius to their small cap focus fund.
Right, and analyst sentiment is overwhelmingly positive.
So the pros are looking past the daily volatility.
I think so. They see the backlog, they see the NVIDIA relationship, and they're betting on the long term. They believe Nebius is building the railroad for the next industrial revolution.
Okay, so that's the sunny side of the street. Billions in contracts, best friends with NVIDIA, sovereign moats.
All sounds great.
But we have to look at the flip side. Because if everything was perfect, the stock wouldn't be sitting at $99. There are some ugly numbers in here.
There certainly are. If you just look at the financial statements without context, you'd run for the hills.
How bad?
In 2024, they posted a massive earnings decline. We're talking a drop of over 236%.
236%. That's
Yeah.
painful. That sounds like a disaster.
It is painful on paper. And on top of that, the valuation is sky high. It's trading at a PE ratio of over 106.
106, wow. That is priced for absolute perfection. For every dollar of profit, you're paying over $100.
It is aggressive. But we have to contextualize that earnings drop. The reason is simple. The cash burn.
Ah.
Remember those $20 billion in contracts? Well, you can't fulfill them with air. You have to build the data centers. You have to buy the GPUs.
So this is capital expenditure, CapEx.
Massive CapEx. Right now, the money going out the door to build the infrastructure is vastly outpacing the money coming in. It's a J-curve.
You go deep into the red to build the asset.
And then the asset prints money for a decade. That's the plan, anyway.
So they are bleeding cash to build the machine that will eventually print money.
That is the bet. But that leads to the biggest risk. Execution risk.
Right.
Having a contract is one thing. Actually building a physical data center on time and on budget is another. We're talking pouring concrete, installing complex liquid cooling systems.
And getting power. Power is the bottleneck everywhere right now.
Exactly. If there are delays, even a 6-month delay, it could crush the stock price. Why? Because that premium valuation doesn't allow for mistakes.
If you delay revenue, the math falls apart.
And the market will punish the stock mercilessly.
It's like buying a house before it's built. And speaking of trouble, we have to talk about the macro stuff. We've got tariffs in the headlines constantly.
This is a significant headwind. We have the threat of Trump tariffs on European goods. Since Nebius is heavy in Europe, this matters
It makes everything more expensive to build.
directly. And it's not just tariffs. There's the regulatory stuff, too. Export restrictions on chips are always a looming threat.
The U.S. government is very sensitive about where high-end AI chips end up.
It is. If the U.S. decides to tighten the leash, that could throttle their supply. And then there's the internal stuff. You flag the news about control deficiencies in their audits.
Yeah, that sounds scary. Control deficiencies makes me think of Enron. Is it that bad?
It's not great, but we should clarify it's not necessarily fraud. Usually it means their internal accounting processes haven't caught up with their scale.
So the engineers are running faster than the accountants.
Exactly. Creates friction, increases compliance costs, and it makes investors nervous. It's often a growing pain, but uncertainty is punished.
Right. And clearly some people are betting on that punishment. The short interest is pretty high, isn't it?
It's over 15%. That means 15% of the available shares are being sold short. That's a crowded trade. A lot of people are confident Nebius is going to stumble.
That is a lot of skepticism. And I also noticed some insider selling. The CEO, Arkady Veloz, and others.
Right, like Kira Rudinsky.
The amounts were small, like $43,000 for Rudinsky. But still, when the boss is selling, should we be worried?
It's a signal worth watching, but you have to keep it in perspective. $43K for an exec at a $25 billion company is basically lunch money.
Okay, fair enough.
But when you combine insider selling with high short interest and a high valuation, it paints a picture of a battleground stock.
A battleground indeed. So let's reset the board. We had the bull case, we had the bear case. So what happens next? What am I watching in the next 30 to 60 days?
There are two immediate events. First, we have the Q4 2025 earnings coming up in late February. This is the big test.
The moment of truth.
Investors need to see proof. They want to see that contract money actually hitting the books.
Yeah.
Revenue recognition.
Just show me the money. Stop talking about the deals and show me the checks.
Precisely. If they miss on revenue or lower guidance, that stock price is going to get hit hard. But if they beat...
Oh, if they beat, let me guess, with 15% short interest.
Exactly. We could see a massive short squeeze. All those short sellers have to buy back their shares to cover their losses.
Forcing the price up.
A cascade effect. And technicians are already spotting a bull flag on the chart, which often precedes a breakout. Good earnings would be the spark that lights that fuse.
And then right after that, in March, we have the NVIDIA GTC conference.
Yes, and that is where the narrative gets reinforced. If Nebius is on stage, or there are new announcements, that solidifies their moat. It validates the tech thesis. Right after the earnings, validates the financial thesis.
So February for the numbers, March for the story, and looking a bit further out, Q1, Q2. We're looking for that token factory traction.
Right. We want to see if the inference business is actually generating revenue. If they can show they're making money from running the AI models, that changes the margin profile completely.
That's the path to justifying that PE ratio.
It proves they have a recurring revenue model, not just a one-time construction boom.
So it really comes down to execution. They have the map, they have the car, they just have to drive it without crashing.
That is the perfect summary.
Oh.
It is a high-stakes race.
So what does this all mean for you, the listener? It feels like Nebius is a classic high-risk, high-reward play.
It is. It's a battle between a guaranteed $20 billion pipeline and the massive, messy reality of building the infrastructure to support it.
If they pull it off, $99 might look like a steal. If they stumble.
There is a long way down.
It's never boring in the AI space, is it? And before we wrap up, here is a final provocative thought for you to chew on.
I like this.
We talked about tariffs, but think about the bigger geopolitical picture.
Yeah.
Think of Nebius as a European hedge.
A hedge against what?
Against U.S. dominance and instability. As tensions between the U.S. and China rise, or if U.S. policy shifts, Europe is going to desperately need its own AI sovereign cloud.
They cannot rely entirely on U.S. hyperscalers if the political winds change.
That's true. If the U.S. government suddenly says no U.S. chips can process European data, Europe goes dark unless they have local infrastructure.
Exactly. Nebius is currently one of the only major players seated at that table with the hardware to back it up. It becomes a strategic asset for the continent, not just a company.
So even if the U.S. market gets choppy, they might be the only game in town for a secure European AI stack. That is a powerful position to be in.
It turns a tech stock into a geopolitical asset, and those tend to hold their value when things get weird.
Love that perspective. All right, that is the lowdown on Nebius Group. It's volatile, it's expensive, but it's holding the keys to some of the most powerful tech on the planet.
Keep an eye on those February earnings.
It's going to be a wild one. Thanks for tuning into the Easy Money Show. Don't forget to like and subscribe so you don't miss the next move. We'll catch you next time.